What's going on, everybody? Just take a look, stay the look of the market right now. Let's look at, well, we might as well look at this right here. Current profit, we're at 10,000 bits, 10,500 bits. Can't wait till I reach, was it a full Bitcoin or at least half a Bitcoin? That would be like a serious milestone. We're close to a quarter of a Bitcoin. But, yeah, looking to see if we can hit our target up here. We have our average at break even average. So I think we close the day above here, and we're looking for a retest resumption on that to continue higher. So hopefully there's enough baked in on the bottom to where it can continue higher. We don't hit our stop. If we go to like a smaller time frame, it looks like we could come in and get that imbalance, but it also looked like this H1 market imbalance got protected. We'll see. We'll see. Because if it's coming down for another retest here, I would say it's pretty much over. If we're looking at the H1 order block, yeah, like if it goes all the way through, I would say it's pretty much over for that. Maybe I don't know. I have my stop loss currently at the break-even average. I'm thinking maybe I need to do an H1 trail, what 4 ATR to see if it'll go higher. But I feel comfortable with zero risk. So zero risk, and I'm targeting that target. We'll get us 60,000 bits, which roughly, in my mind, that's like $1,500. 60,000, in my mind, is like 2,000. But that changes, depending on the rate. That's just some quick numbers for me. But yeah, let's take a quick state of the market. We on the weekly, we're above weekly resistance. So Friday is going to tell all of what happens, but I think coming into London session, we'll see a lot of movement, and then we might see a lot of movement intraday Friday, in my mind, as this is Thursday. Maybe we peak out on Friday, we close, and then we do an about face on Monday. It's totally possible. Let's go ahead and take a look at just different things. One thing that caught my eye was oil. We're gonna get to that, but I'm actually thinking that so I got these pivots in, and I have a quarterly pivot right here. So I'm thinking that I want to be buying anything. The rate hike is done. So in my mind, I'm thinking, okay, the damage is done. The fear is in. It's time to start looking for buys, and I think it's actually a good deal to start looking for buys. I mean, we're at the 0.246. I say we're at support. Any kind of reclaim, we're at the 0.382. A reclaim here at the 0.382, I think is a good deal. I mean, we see this trend line here on oil, so that's something I'm really interested in. Take a look here. I mean, the sell side, it would have been better if we saw some red to get rid of that chop and noise. We could be seeing some more selling. We really have to be really careful on some kind of pullback. We don't know, but it does look like we closed the day over the 0.32 on the 52-week range. So we'll see. I mean, we're at resistance, so I'm not going to buy right now. I'm waiting for a pullback before getting involved. And then with this, we didn't go red here. I'm going to start out small and then scale in more aggressive. Consider this the financing piece. So whatever small entry we get, we'll finance a bigger position down the road. But we need to definitely close the day. Let's see, we get this involved. Oh, I think that line is involved. I think that's this line. If we can reclaim, that matches with this low on the daily. If we can reclaim that area, then we'll be looking good. Maybe we get a double bottom and we come back down into the monthly open. But that would be nice if we come down in some way, because I'll show you what I mean. But Let's go let's go here. Let's look at the credit spreads. People are like seeing some changes in the credit spread, so it might be a good thing. We'll take a look. Still 2.1 moderate, so it's still elevated. Let's see if it's like last updated March 16th. So let's see if there's anything new. I guess we have to wait for tomorrow for it to update. I guess it's a 1-day lag. But I think it's abated a little bit. It's like gone down. So it's good. So we don't need to be looking at that. This is just for like finding targets, like for the SP 500. Like that's a target. Things that haven't been tested. Like I think that's been tested. But yeah, like on the daily and the weekly and the monthly and I think the quarterly. Let's look here. Does the quarterly have that pivot there? No. And it's tested most of the pivots on the quarterly. But I think I like this kind of view. I'm not 100% sure. Like I'm thinking of maybe it's either have this on the noise section for like fake outs. I was just thinking that with this being ranges, it would get too confusing, and that this quarterly is best over here. But anyways, that's just more of like a setup deal. What the heck is popping? All right. I don't know what's going on. But anyways, so as far as like events, we haven't had anything new. We're gonna we looked at the credit spread. Oh, there it is. The internet's lost. Okay. That kind of sucks. Right before the market's supposed to open. All right, cool. So close that. Oh my gosh. Close it. So yield curve, we would look at that. Looks like it's 2030 still inverted, and the 7 and 10 is still inverted. So we're still kind of betting that things won't work out. Oh my gosh, did it really close the day? It closed the day. Oh, yeah, it closed the day right there. So maybe we'll see reversal. That kind of sucks. That was a stop hunt. It was a stop hunt, and we might reverse right there. Let's see. No, yeah, the day is closed. And it closed right there. So that kind of sucks. Because I was expecting it to go a little more. So maybe I need to start taking profit. Maybe. I'll, instead of maybe getting that 50,000. Oh, man. It's just hard to believe. We'll see. I kind of... I'm not like really hurting for bits. 10,000 doesn't seem like a whole lot to me. I would rather get the 50,000 or nothing at all. That's kind of just how I'm viewing it. And if we get a breakdown in market structure, so be it. Like that's where I'll make the money, not off of this one. Like we want the big swing. I think it's possible. We'll take a look, but yeah. So as far as like the inversion of the yield curve, 7 and 10 is inverted, 20 and 30 is inverted. Let's see if any updates. Nope. But that's kind of all we need. We need just some fear in the market, some fear in the bond market. We'll take a look at the MOVE index, and then it looks like the 2 and 2 year is moving on up. So MOVE index is moving on down. So we got to see the weekly close. Could be a fake out. But it's looking like the credit stress isn't as bad. As far as like the 2 and 10, looking like we're kind of going sideways a little bit, but we're pretty close. 0.25% away from inverted on the 2 and 10. So something really interesting to just keep tabs on. And then as far as that, let's go ahead and move to S&P 500. Um, and then I think we already got our levels written here. So could see a reversal here. We'll have to wait and see just how we go into the London session. Could be an effort to squeeze out the bears all the way up to here. Who knows? Or we just build in some really massive resistance. I think we went through one resistance and we're almost poking through another one here and on the weekly. So we're into two resistances. So I wouldn't be surprised if we have a pullback, and the RSI is pretty overheated. But that's kind of what we're seeing. I do want to reach this target if we can. If not, it's no big deal. It's a break-even average, and my bots are ready to go short whenever the time comes. So then now we went through that. Let's go through the dollar. So let's take a look at the dollar. And the dollar looks like it was picking up. Let's go here. We kind of already know the context here of the support and resistance. Maybe we can get this line to draw in the next level. I think it's 0.13 right there. Let's see where we're at there. Looks like we're at support. We're at support right there. So as long as we stay above the 0.13, I think we're Gucci. So that's that context. Let's go ahead and look in here. We have the dollar, and it's like the opposite of this. So it's like inverse of what you see here. We're at resistance right here, and we poked into the 100% ADR. For some reason, I still think there's a little more room left. We'll see. It might get rejected. I'm looking for a breakdown and an H1 market structure break, which is all the way down here. Until this breaks, I'm still going to believe that it's going to pump higher, even though it just lost whatever this level is. So I'm going to be waiting. For the 15-minute, we did lose the 15-minute market structure break. I will be looking for a 15-minute market structure break a little bit higher in the ADR. But as far as like the context here, we just bumped into the 24 moving average, and it's still going as we speak. But for some reason, I believe that we could see a higher range. And if I'm wrong, I'll get knocked into the trade by this H1 breaker. But I still don't think it's over yet. We'll see. It's kind of those things that we'll see. Oh, we just opened on the market, so that's why it's lagging. So start seeing everything start to wake up. Yep, we just reset the timer. It should reset all the ADRs, so let's take a look. Yep, ADR is reset, so we could spike into the 72 this coming Friday, and that could be that. Let's look on the weekly MACD, see where we're at on that. It's just all the markets are starting to wake up. It's all gray on this side. Let's see if it comes all black, if they all open. That's what I'm expecting, all these to just start lighting up. Yep, there it is. It just opened. So on the weekly, looks like the MACD is getting close. Right here on the weekly, MACD is getting close. Who knows? Maybe the timing solutions is a little ahead, and the market's a little lagging. But of course, we're letting these market structure breaks decide what's going on. But yep, we did have a 15-minute market structure break, so we'll be consolidating a little bit. As far as like the US 500, SP 500, we did not break down on the 15-minute market structure break. I'm expecting it to pull back into here, but that's about it to close that market imbalance. But I'm expecting, because the 15-minute hasn't broken, I'm expecting it to hold at least, and then come London Open, pump pretty hard and just hold right there. If the H1 market structure breaks, then I'll consider early taking profit. But right now, I think it's just now starting to consolidate, and so from what it did on the close, it looks like its stealth prevented the market structure break happening on the day. So maybe this Friday we get a crazy pump before quad witching, a quadruple witching. So that's like a possible event, or it gets rejected. So I'll let the H1 market structure break decide that. But it looks kind of crazy. If we hold here, we could pop into here, get extremely overbought for like a rejection. But so that's that. And then as far as like something to get excited about for oil, let's see. I want to make sure I'm just following my what I've laid out. Okay, cycles. We kind of know the cycles for the S&P 500. We're expecting some kind of rollover, either tomorrow or Monday. I mean, we can't like pin down the exact day, but we're going to be looking for overextension and then a break in market structure. RSI is overbought, and it's either going to be sometime soon. So we're just looking for the market structure break here. Trend efficiency, it hasn't been really overextended anywhere, even on the S&P 500. We would like it to get extended. And then it would definitely signal that, like, okay, this is going to be a high quality market structure break. Like it'll be easier to go at a normal position sizing once we have that signal. But right now, it's saying that basically, hey, we're chopping. It's low signal. Don't make any fast moves. That's what it's basically telling me. But pretty much we went through all of this. COT report's still strong the dollar, so we expect further of that. And then until this Friday, they come out with a new one for the week. And then as far as like the moving averages, I think we just popped over the 200 EMA. I think we got rid of the 200 EMA pop up over here, right here. So the 200 EMA is right there. If we go on the H4, it's right there. So we've popped up over the 200 EMA. So we could either see some more resistance at the SMA or the 72 moving average before kind of reaching that further extension. But and then we're looking for some kind of extension. So as far as like Euro US dollar, we did get some extension and it pulled back. And then as far as like extension on the S&P 500 today, I don't think we got a whole lot of extension. I think we just consolidated. And then the macro range, we are starting to get, let's take a look at the macro range. So we want noise. So the macro range is for the S&P 500. We'll do the 52-week range. So we can get rid of these noise stuff. And then we could narrow this down to 2. So we got the 52-week range on the right, and then the 2-year range on the left. So then we'll get rid of this, and then we just tapped the 0.5 on the fib, and going into the 0.382 would just be a really big signal to short as a fake out. But it looks like we're in the middle between the two, 0.5 and 3.382. So it doesn't look like we got a whole lot of signal as to what to do. And we're above the monthly open. So it just looks more bullish than bearish until we reclaim the levels below us. On the 2-year range, we are in the middle between the 0.246. I guess that's like the 0.13. There we go. So we're under the 0.13, which is oddly enough probably where... put this here, and then we'll sync this. It's right where the 0.13 is. So we'll be looking for some kind of rejection around that area on the 2-year range to push us down to the 0.382 down here. And then we'll see if the 0.382 holds. If not, the 0.5, and then it'll get us out of there. And then we'll jump back over the 0.382. But that's kind of just what I'm thinking as far as like some targets and just the macro range. If we get up to the 0.13, that would be our chance to really short into resistance. So let's go back to the diagram so we kind of just keep our logic. Okay. So we went through RSI. I talked about it. Didn't need to really show it. It's overbought. It's just the dailies catching up, but we're overbought definitely on the H4. And then trend efficiency. We haven't had any real signal for trending, or at least like a reversal point. So we'll be definitely watching out for that. And then market structure break. We haven't had any really significant market structure breaks, so we're waiting for that on the breakdown on the H1 and the H4 to the short side on the S&P 500. But as far as like in line with the fundamentals and the cycles, we're looking for a short, and we were looking for a market structure break, and that's pretty much it. And an extension in the range into resistance, and we've already picked out what it could be. So now, just something really interesting that I found relating to oil. So oil, I had, if I go here, and then here, and then we put this to the 3 window, we get access to the quarterly with some fibs, and we go to West Texas Oil. We have a untested pivot here, and I don't know, I'm thinking that on the quarterly we close above here, and then we come up here. So right now we just had a huge sell-off on oil, and we actually just came back from H4 market structure break. So I'm looking for it to. So I went down to the H1. I was like, okay, so is there any market imbalances that it would like to go touch? So there's this one here. So any kind of sell-off on the any break on the H1 market structure break to the short side, I'm going to be, as the closer it gets to this market imbalance, the more I'm going to buy. I'm going to buy it up big time. Maybe it does a double bottom. So this is an H4. We did a double bottom here, but I'm thinking it still probably will consolidate a little bit more. Let's see. We want to change the indicator to have the H1. Okay. Okay, so once we see an H1 breaker, or if it holds, then we'll buy the resumption on the way out. But if it breaks and we have an H1 breaker on the H4, we're expecting it's going to go test that market imbalance. And then, but if it holds, we're going to be doing some buy stops on the way up, just because we're with this market imbalance here. It's telling us this is a target and price is going to want to go up there. Because it didn't go up there, we expect that it's still going to go back. And any kind of distance it makes on a reclaim of this level will be free money. That's kind of just what it's saying. Not financial advice. Of course, I got to say all these disclaimers, but that's kind of what I'm thinking to myself. If I was talking to myself, is that until the quarterly close and until and based on kind of how this structure is looking, we need to begin thinking bullish about oil, just because we're having a reversal and a reclaim and a deviation to the downside. So then a reversal to the upside. That's kind of what I'm saying. So that's kind of just what's interesting. We're going into this weekly close. We'll see kind of how it closes on the week. Hopefully, I get my retest all the way down in there, and then we resume, because it would look really nice for that to happen. But I think it closed below this last week low. I think it closed below. So it kind of makes sense that we might go down to the 24. The 24 moving average, or at least point of origin. At least retest point of origin. See if it's with it, and it's all what it's cracked up to be, or at least a little, at least at this wick, So we put this right there. Okay, put this H4. So at least like right there, that would be nice. Let's go to the H1. Oh my gosh, let's get rid of the filled. It doesn't matter. I'm going to be moving back. So if we at least came down to here, then I don't know. We might have a break on the H1, and then it would force us all the way to this market imbalance. So that's kind of just what I'm thinking. And oh my gosh, these market imbalances are these filled gaps. I just don't like it. I don't care about the filled gaps. But yeah, that's kind of what I'm thinking with oil. And where I would make a play, because before I was like, man, this looks dangerous. It looks like a huge pump. I'm not going to chase it. Here is where we're not chasing it. We're buying into over exhaustion and oversoldness, and where the deviation is trying to occur. And that's kind of just where our safety is. I mean, the breaker is pretty much that. This breaker, this zone, any kind of reclaim to the so once it goes in it, any reclaim back above, I understand it's back above it right now. We want it to go inside this breaker, and then we want it to come back above and then go super bullish. Well, I'll be buying on the resumption, definitely, and I might be a little aggressive and buy down here on the point of origin or at this area right here. Which is the wick on the daily. So any kind of point into here or down here, I'll be buying just small lots for, of course, speculation. But I'm excited because I never thought I would have a chance on oil, but here we go. I think this is it. If there was a chance on oil, it's this pullback and this reclaim. So thanks for watching. See you in the next video.